please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
From the same pad where NASA launches rockets that carry humans into space, Elon Musk's SpaceX launched the Falcon Heavy. Not only was this one of the most powerful rockets sent to space by a private company, but the content of the rocket was even more peculiar. It carried Elon Musk's red Roadster, an electric sports car built by Tesla, and inside the car is a mannequin. They are both expected to orbit the sun for millions of years to come. Good evening and welcome to CNBC TV18. I'm Kritika Saxena, and on that good note, Reporter's Diary starts now. Well, lots lined up over the next 30 minutes, but let's start the show with the top national story of the day. It was the Congress party that divided the nation for selfish gains, and it is the same sin that the country is still paying for. A direct accusation made by the Prime Minister Modi against the Congress party in his motion of thanks address in the Lok Sabha. In a nearly 90-minute speech by the Prime Minister, he took several digs at the Congress party. He also reiterated that Congress party is entirely responsible for the entire NPA or the non-performing asset mess that the country is going through.
आपके चरित्र में है जब भारत का विभाजन किया आपने देश के टुकड़े किए और जो जहर बोया आज आजादी के 70 साल के बाद एक दिन ऐसा नहीं जाता है कि आपके उस पाप की सजा 125 करोड़ हिंदुस्तानी न भुगत। अब समय आ गया है कि देश के सामने सत्य आना चाहिए। ये एनपीए आपका पाप था। आज मैं देश के सामने पहली बार ये जानकारी दे रहा हूं। 18 लाख से 52 लाख 18 लाख करोड़ से 52 लाख करोड़ लुटा दिया आपने। और आज जो पैसे बढ़ रहे हैं वो उस समय के आपके पाप का ब्याज है। ये हमारी सरकार ने दिए हुए पैसे।
प्रधानमंत्री जी से हमने 3 सवाल पूछे हैं। आज 1 घंटे से ज्यादा बोले। राफेल डील पे प्रधानमंत्री जी ने एक शब्द नहीं कहा। राजनीतिक भाषण किया, कैंपेन स्पीच करी, मगर जो देश के सामने मुद्दे हैं, रोजगार का मुद्दा, उसके बारे में प्रधानमंत्री ने कुछ नहीं कहा।
In fact, Congress President Rahul Gandhi was quick to hit back at the Prime Minister. He said that the Prime Minister said no words on the Rafael deal in his 1-hour speech. Here's exactly what he said on that. Okay, we actually will get you that in a bit, but let's get the top story this evening. And that, of course, is the RBI's monetary policy decision. As expected, the Monetary Policy Committee has left key policy rates unchanged. But with warnings on inflation, crude oil prices and fiscal deficit, the RBI made it clear that it does have its finger on the trigger for a future rate hike. First up, here is exactly how the Monetary Policy Committee voted. Let's pull that up for you. Governor Patel and Deputy Governor Veeralacharya voted for a status quo. But Executive Director at the RBI, Michael Patra, voted for a 25 basis point hike in the repo rate. So all the 3 independent members on the committee also voted for a status quo, which essentially means that just one member of the MPC was in favor of a rate hike. In the press conference, Governor Urjit Patel underlined the risks to inflation, especially from crude oil prices, and raised the bank's near-term and medium-term forecast. The RBI also cut its GDP forecast for this year, but maintained its 7.2% growth forecast for FY19. However, Governor made it very clear the recovery is at a nascent stage and it must be nurtured. The Governor took the new fiscal deficit targets in his stride. However, he also warned against any further deviations. Listen in to what the Governor had to say in the press conference today.
The nascent recovery needs to be carefully nurtured and growth put on a sustainably higher path through conducive and stable macro-financial management. Against this backdrop, the MPC emphasized the need for vigilance and decided to keep the policy rate on hold with a neutral stance while reiterating our commitment to the target on a durable basis. Looking ahead, the MPC noted several upside risks to the inflation trajectory. The firming up of international crude oil prices, the hardening of non-oil industrial raw material prices, and stronger pricing power among firms. While inflation will likely move in the range of 5.1 to 5.6% in the first half of the next fiscal year, i.e. 2018-19, favorable base effects, including unwinding of the 7th Central Pay Commission's HRA impact, combined with expectations of normal monsoon and effective food supply management, may see inflation easing to 4.5 to 4.6% in the second half, with risks tilted to the upside. Even as the fiscal deficit has stayed above 3%, inflation has come down to some extent because the fiscal stance starting from 2014 has actually been on a downward trajectory. Secondly, the monetary policy itself has become much more flexible in terms of responding to the inflation risks. So it is not necessary that a 3% target should be achievable by the time that the report said. The report was written in 2014. However, having a fiscal stance that is conducive to achieving the 4% target is important, and significant and postponed deviations from them would make matters more challenging going forward.
Okay, so let's put this into perspective then. Lata Venkatesh is here to take us through her analysis of the monetary policy decision. Lata, according to you, what are the key takeaways? The fact is that this is a status quo, but in terms of the commentary, some important points have come in, some disappointing, very few could be slightly positive.
Well, the long and the short of it is that the bond markets have read the monetary policy strictly as not so hawkish. And the main encouragement for them is that the March 2019 end inflation number has been projected by the Reserve Bank at around 4.5 to 4.6%. That's a big relief, because even with that in mind, they are not at the moment hiking rates, and despite the fiscal deficit targets being pushed back, fiscal consolidation timetable being pushed back, the MSP getting structurally perhaps more inflationary, and the trends we are seeing in global commodities, both crude and non-crude, the Reserve Bank has chosen not to change that FY19 inflation number. That is a major relief for the bond markets, which means that although from now to March 2019, there isn't even 4% inflation reading, the Reserve Bank is not hiking rates, which means it is reading its mandate as not 4%, but as 4% plus or minus 2%. It's chosen not to drive home that 4% number too much. That is a big relief, and that is the big takeaway from this monetary policy. Good for bond markets, at least as of now.
Okay, so of course bond markets will be in focus over the next few days, but thanks Lata for taking us through the key takeaways, especially as far as the commentary is concerned. But let's talk about the trading action today. The last street essentially failed to mirror the overnight rally that we saw on Wall Street, with the RBI policy dampening sentiments even further. So the Nifty opened above 10,600 and saw selling pressure from the first tick. So as you can see on your screen, the index saw a steep slide in the last hour of trade and closed with a 20-point cut. So a lot of the gains that we saw over the last 2 days seem to be reversed. The Sensex also opened above the 34,300 mark but ended more than 110 points in the red. Bank Nifty was the very clear underperformer, as it has been over the last few days. A status quo policy saw selling pressure on that index, which ended with cuts of about 0.5%. Mid-caps, however, did seem to buck the trend a bit, slightly higher than expected. There you go. It was up by about 0.4%. We will take a very, very short break on that note. But coming up after this very quick break is all the Supreme Court action. Supreme Court cancels all iron ore mining leases in Goa. No operations after the 15th of March. Details when we return. Welcome back onto the big story in the earnings space. IT services major Cognizant has reported its fourth quarter numbers today. So it's been an interesting set of numbers. If you look at the revenue has come in bang in the middle of what they had guided at $3.83 billion, up about 1.6% sequentially. But the operating net income rather was hit due to a one-time provisional income tax expense of $617 million. So they actually saw a net loss this time of $18 million. Now this one-time provision of 617 was due to expenses related to the Tax Reform Act in US. Now remember, this is something that was expected to hit companies like Cognizant and TCS. So this raises an alarm that is this something that IT companies need to be prepared for. But keeping that in mind, keeping in mind that yes, there is a one-time $617 million provision that they have made in this quarter, they have actually shown a good set of numbers. So it begs the question that if that wasn't there, could they have actually beaten their guidance? Now, the important part is the full year guidance. They have met their full year guidance as well, with a growth of 9.8%. And for the next year, they are expecting revenues to come between $16 billion to $16.30 billion, which indicates a 8 to about 10.1% revenue growth, which is important. This is the first IT company that is actually giving outlook or a guidance for 2018, and that is significant. For Q1 of 2018, remember they calculate their earnings on a calendar year basis. So for Q1, they are expecting a growth of 1.3 to 2.3%. Typically, Q1 is a sluggish quarter. So that is actually in line with what was expected. So that's as far as Cognizant and earnings corner is concerned. But let's move on to court action. In a big legal setback for miners in Goa, the Supreme Court has cancelled 88 leases that were renewed in 2015. The licenses were renewed by the state government just before the Mines and Minerals Act mandated the auction of mining leases. So this essentially means that all mining activity in the state will come to a halt on the 16th of March. The top court did not only cancel the lease renewals, it also came down heavily on the miners and the state government. Ashmit Kumar is here with more details. Ashmit, what exactly did the court say? What's the rationale? And what are the options now that these companies have?
At this point, the court has unequivocally held that there has been a blatant violation of law, that this is not even a recent scenario. This has been a constant feature of not just Goa mining operations, but mining operations across the country, using very strong language saying that the state has been unable to stem the flow of such illegal actions, and that it is urgent, it is incumbent on all stakeholders to ensure that there are sustainable mining practices. This was the broad sum and substance, the tone and the tenor of the judgment that came out today, the judgment that has unequivocally held that as far as mining lease renewals are concerned, especially in the state of Goa, just before the introduction of the MMDR Act, that has been patently illegal. This point was brought to the attention of the court by way of an NGO which filed an application that listed out various abnormalities, various anomalies with the second mining lease renewals that had been granted to 88 mines. Now, on the back of that, the Apex Court has taken cognizance and issued a two-part order. The first part is that, I beg your pardon, the first part is that the Apex Court has clearly held that all mining operations need to be held and that the mining lease renewals will be quashed. This is with respect to the mining lease renewals of 2015. The second part is that the mines in question have been given time till March of 15th to wind up their operations, because this order, the court says, becomes effective on March 16th. Now, let's keep in mind that this is, of course, uppermost court of the land. So there are no appeals available as far as, there are no legal remedies available as far as concerned parties. And speaking of the concerned parties, the only listed player which stands to get affected will be Vedanta, which has iron ore exposure to the mines of Goa. Thank you.
Okay, fair enough, Ashmit. Thanks for joining in and breaking that up for us. We will take a very, very quick break on that note, though. Up next, India's biggest auto event, the Auto Expo 2018, kicked off today. We'll bring you all the action on the other side of this quick break. Welcome back. Time now to drive over to our special coverage of India's biggest auto event, the Auto Expo 2018, which kicked off in New Delhi today. The event that will last till the 14th of February has begun with a slew of launches and unveiling of some concept motor vehicles. Our team at CNBC TV18 caught up with some of the biggest names in the auto sector on electric vehicles, new launches and the company's outlook. Listen in.
We do believe electric mobility is indeed the future for the automotive industry in India. That's one of the reasons why we said this year it's not going to be a conventional a kind of Expo 2018. It's going to be, as we call it, smart mobility for smart cities.
Are you going to participate in the next round of order for EESL, since you had the most competitive pricing that you had offered?
We don't see another round right now. We are waiting these days to receive the LOA for the larger volume.
We worked with Sun Mobility and we came up with a concept where as soon as the bus comes in, the robots come in and take the batteries off and put a new battery in, and the old battery goes in for charging. So rather than create a battery which can take a bus for 500 kilometers and roughly that would be 4 tons of battery, here you need only about 50 kilowatts to go about 50 kilometers or something like that. Hardly any weight, so you can enhance the number of passengers. So for a city bus, this is a truly Indian solution.
When can this concept be, at least for pilot?
This is a running bus and we will be running it in Chennai. We have got 2 or 3 governments that we are working with, and as soon as the orders come in, we should be ready with the productions as early as June.
It's a concept car, so world over the trend is that first a concept car is showcased and then we invite the feedback from our customers. So based on that feedback, there would be certain modifications will be done, and then it will take the shape of a car which would be coming on the road. Okay. So right now defining the timeline on this would be difficult. Going by the previous feedback, we launched Vitara Brezza from the same platform 2 years ago. And it has been accepted very well by the customers. So certainly we have to keep ourselves in line with the emerging trends, and this is an emerging trend, I should say.
And of course, stay tuned to CNBC TV18 for all the action on and from Auto Expo. And of course, log in to our Facebook page as well as our YouTube page. All the exclusive interviews and the new launches are on there. But we will have to wrap this edition of Reporter's Diary. Many thanks for watching. Stay tuned to CNBC TV18. Coming up next is the RBI monetary policy analysis, where experts decode the policy for us along with our very own Lata Venkatesh. Stay tuned.